The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 58. NASDAQ is down 214. S&P is off 30. Gold contract up $5, trading $19.49 an ounce. We get silver down, silver up 12 cents. $27.52 an ounce. Light sweet crude off 39 cents, $41, 11 cents a barrel. That move on oil, folks, is something else. Bottom line, you had a drawdown of 9.5 million barrels yesterday, and they sold it down $1.50. Notes and bonds. 10-year note up 4.6 right now at 139.22. The 30-year is up 14 at 177.21. And King Dollar. King Dollar just can't handle price once again. Pretty amazing, folks. King Dollar has not been able to take out a swing point, bottom line, for months. And in this particular case, the swing point is a minor swing point. So you're down 24.6, 92.822. Euro's at 118. The yen is at 106.36. And the British pound is at 133 to 1 U.S. dollar. Tom O'Brien, what's going on? We get some red on the screen out here, man.
I don't. My brain's misfiring, man. I see Tesla in the red. I see Apple in the red. I see Microsoft in the red. What's going on?
I would say what's going on is that Musk must be one of the best traders in the world out there. Does a at-market deal at 500. We'll see whether they sold any. And you're at 428 within 48 hours, right?
Right. Totally.
You got to love it, man.
Definitely.
Let's go over to our man, Mr. Kevin Hinks at TD Ameritrade Think or Swim, as we do each and every Tuesday, Wednesday, Thursday. And, folks, if you want to understand the option market, option strategies, futures, great program. He brings you through the strategies each and every day, each and every earnings season. Amazing program. If you haven't test-driven yet the Think or Swim platform, real easy to do. You're on our site, hit the banner, bring it up to allow you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. Live by the Tesla sword, die by the Tesla sword. I think that's what today's NASDAQ is all about. That and Apple. You know, this is just, remember, I heard a great statistic. Apple has 4 stock splits in its history. 2 weeks after each stock split, the stock was lower each time.
Okay. Yep.
Right? So
yep.
It runs up an unbelievable amount into that. It's got to consolidate. The fact that these two stocks are both consolidating, correcting, whatever you want to call them, is perfectly natural for what you have going on here.
Yeah, there's no doubt. You know what's amazing, Kevin, too? Not so much with Apple, but Apple's done some monster pullbacks. Every time that I look at Amazon, it blows my mind the type of retracement that Amazon can get. It hasn't done it yet. But it's like every time it's like, oh, my God, it comes down so dramatically and then sits there for 3 hours, man. I'm exaggerating. Yeah. But then just takes off again. Do you know what I mean? It's like
it gives you a blink of an eye at some nice low levels. And then the rest of the street, Tom, thinks what you're thinking. Wow, it looks cheap down here.
Seriously.
The question really is this stock split euphoria going to spread to other names? And the first one people think about is Amazon. Let's face it.
Right.
People are thinking, are they going to split this thing? So, I think it wouldn't shock me, guys, if what we learned this morning is, the jobless claims number was good. This is not a straight line back up towards a healthy economy. It's a jagged line. So you had a week of consolidation and a week of, going back up and another week of consolidation, and now it's a good sharp drop in this number. But I fully expect this stock market to consolidate ahead of tomorrow's number. It's a big number tomorrow. Obviously, yes. A chance to get the unemployment rate into single digits, I think, is pretty important.
Kevin, yesterday we were talking about the aspect of what a great trading summer it's been, in general. And And I was looking at the, I was reading Tommy's newsletter, and what blew my mind, man, is that some of these equities, literally in 3 or 4 days, went up $20, $30, 10 or 20% before earnings. And then the volatility was still laid out at a monster number. So my point is, folks, is that you want to understand option and option strategies, because that is very unusual, that you'd have the run-up before the fact, and then it's like, okay, is it going to run another $20? Now, we know it can. There's no doubt. It could run $100, right, in some of these equities.
Yeah. Think about this, Tom. After everything we've gone through the last week, the SPX is now down close to 1%, and the VIX is barely up.
Yeah.
What is that telling you about the anticipation of a move, and now you're getting the move?
Right.
Right? It's almost bizarro world. It's going up when the market's going up. When it's going down, it doesn't go up.
I agree. Right? I expected when I saw the S&P's. The S&P's down 35 points right now, man. I said, oh, man, maybe that VIX is hitting 30. No, it's not.
So, it's barely up.
I agree, Kevin, yeah.
Yeah. So, this has been a great summer for trading. You guys are spot on. But that doesn't mean it's been easy, right?
Yes.
It's just been good.
Well, and you can see this is where inside of the option market, when we talk about the strategies that you lay out, that it's much more important to understand spreads than just buying a call or selling a put. Because the bottom line is that, like there's a few of them that come out here today, you would have been right on the move, but you might have broke even after a move of 13 to 15 points. It's like,
right. Right.
Yeah.
Understanding implied volatility, becoming proficient at understanding implied volatility is as vital to trading options as direction is to trading options.
Yeah.
And you're learning that today. And think about it. There may be put buyers in the SPX right now who are barely up money on a 1% down move being long puts.
Seriously, man.
I agree.
Yeah. And, after yesterday, that was the biggest move we had in the S&P in 2 months yesterday.
Yeah.
I mean, 50 points, man.
That doesn't show you, Tom, how still tethered we are to some positive news on the coronavirus.
Oh, yeah.
Sure.
Yeah. There's no doubt about that. We'll see where this whole thing is going to shake out. But the market loves news. There's no doubt about that, man. Do you know what I mean?
I mean, today, guys, today's a pretty healthy stock market we got going on here. Even though the S&P is down 1%, you've got the banks up. You've got the industrials up. You've got all the reopening stocks kind of higher.
Sure.
So this is just not the sexy leadership names leading today, but you've got a lot of you got Boeing up $2.50. You've got all the banks stronger. You got good news out of Costco. Disney is up. So I mean, you've got a lot of green on the board for a market that's down 1%.
Oh, I mean, yesterday was like a blast from the past when you had Coca-Cola and IBM leading the Dow Industrials. It's like, what? What year are we in, right?
Exactly.
Totally. Listen, folks, 45 minutes from now, outstanding program. Kevin, you have a great one, a safe one. Oh, it's already Thursday, huh?
Got a long weekend, too.
Hey, man, have a great Labor Day, man.
You too. Enjoy that beautiful Florida weather, guys.
Totally. Thanks so much, Kevin. Have a great one, man. Have a safe one. Stay right there, folks. Tommy and I are coming right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 300. Dow's down 127. Nasdaq's down 285. S&Ps are off 39. And Tom, we got to look at Tesla for a second because this is so strange. You know, I joke about the aspect that in the last month and a half we've had a bear market for all of 3 minutes, maybe in 2 days, right?
Sure.
That being said, the definition basically, let's say 20% off your highs, right? Well, yeah. Tesla almost has that in 48 hours, man.
It's craziness, man. It really is. Can you pull up the market cap for them on the description screen real quick?
Yes.
Because, you see these types of moves all the time in smaller companies, but you don't see it in companies valued at $500 billion, which is Tesla. So the market just basically took away, and we're a solid $7 off. What's the low today on Tesla?
405.
So we're $10 off the lows already. But you just wiped out $100 billion with a B in market cap.
I know.
In 48 hours. So 2 days ago, people were looking at their accounts and factoring in their equity.
Right.
And today they're doing the same thing. And collectively, they have $100 billion less money available, man. That's a scary scenario when you have companies that have gone so high that you have $100 billion in people's accounts disappearing in 48 hours. So that's where things get dicey. I mean, it is intriguing, man. I said to a friend at the end of Tuesday night, I said, for the first time ever, I was actually looking at Tesla puts.
You were saying that on the air yesterday. I know. Yeah.
And I said I wasn't crazy enough to pull the trigger.
Yeah.
Because it worked out, but who knows, man? Just like you say, it might be back at 500 by the end of today. But it had gotten to a point where risk reward, it went from 270 to 500. It was up 84% since August 11th on nothing more than a stock split. Okay, and it was intriguing that, of course, then you get the news that Tesla's selling 5 billion shares. Then you get the news that their biggest outside shareholder has to reduce the position because it's basically
that was a big one. Yeah,
it's just too big, and it makes sense. It's too big for their portfolio. You know what I mean? Just it's too big. That's it. They had to pare some of it because it just went from 270 to 500.
Exactly.
So both of those, I think, combined just with a little bit of reasonability, a reasonable nature of traders saying, hold on a second, but you never know, man. When something like this, it's defied the odds for years. So I don't imagine I'm actually going to be short, because the other side of that is you needed to pay quite a premium. I mean, let's just see what they're at right now, man, in terms of at the money. When we're talking about Tesla, what are they costing? Let's see. What are we trading at? We're trading at 417. You want a 417 put that expires at the end of the day tomorrow? You're paying $13 immediately.
That's intense.
And you have 48 hours of trading, So, you want 100 shares, that's $1,300 you got to put up. And so, it's big action you need in there.
There's no doubt. And, with Tesla, what you got, it's only going to take a few more days. The bottom line is that, we have, let's see, there's a rebalancing, I think, in like 2 weeks. And the real question is, are they going to put Tesla inside the S&P 500?
Sure.
That's going to be the next deal out here.
Yeah.
Let's go to Jared in Austin, Texas. Hey, Jared, what's going on?
Hey, Tom, how are you?
Doing great, man. Yourself?
Good.
Cool, man.
I want you to look at HIBS, a direction share to short the S&P, but it just doesn't seem to act accordingly all the time, and I wanted to see if you could explain that a little bit for me.
Okay, so let's take a look. HIBS. This is the high beta. Okay, so it's different. This is a S&P high beta bear 3 times. The funds.
And the inverse is HIBL, but neither of them do a ton of volume, but I did hear when you had your direction share contributor on,
yes,
they were introducing it, and I'll let you go from there.
So it's a high beta, which is just not the S&P. So I got to figure out what this is. 1 second. Let me look at this. So holdings. Yeah. So you're saying that, I guess what you're saying is that you're comparing this just to the S&P, right? And that's not it, see? So there's something else in there. This is the S&P high beta.
Just to jump around, I jumped around and Googled it real quick. I got the direction site up there. So the S&P 500 high beta index is 100 securities to include in the index from the S&P 500 that have the highest sensitivity to market movements. That is the beta over the past 12 months. Some of the index top holdings. I mean, you're basically buying the stocks that have gone haywire, right? I mean, look at these stocks. You're talking about
it had good action. It was fun to trade. I've been watching it for a long time.
Cruise lines,
but today, I would have thought I could have got a gain on it, and it's the opposite.
Yeah.
It normally doesn't act this dramatic. Like today, I don't know why it got hammered in the morning.
Well, what would have happened is this. Let's go take a look at this. This would have had to do with the net asset value of the close of last night.
Okay.
So you can see it's trading right at net asset value right now. This is live on my screen. See that says NAV? That's intraday NAV at 466, and it's trading 470. Now, that being said, let me see if I can get... Okay, so the close... Yeah, this would be cool. The close last night was 477, the NAV. Let me just see what it closed at.
So can I throw in?
Yeah.
I think what it has to do with is that, so this is having to do with the stocks that have been most impacted by the haywire of the pandemic, right? And it's an inverse of it. Is that correct?
Yep.
Right?
That's
so
sure,
what's happening today is that, as Kevin talked about, is that we're getting some nice pops in things that have gotten hurt today, like Boeing. Okay, that's up 0.8%. Like, I'm sure Disney has gotten hurt, but we were positive. Some of the banks are up big. They've gotten hurt because of the low rates. So you're seeing, even though the market's getting slammed, I mean, man, the S&Ps are down almost 60 points right now. Some of the other stocks that have gotten hurt so bad, they're not the ones paying the price. You get the NASDAQ 100 down 350 points, right? That's the big tech stocks that have done well.
Yeah.
On the reverse side, we have some of the stocks that have really taken a hurting. Trading, like Norwegian Cruise Line is up almost 8%. There's your problem. You know what I mean? That's what's going on. Norwegian's got a huge beta.
Yeah, because I thought it was, I knew it was high beta in there, but generally when the markets are down like this, I would have figured it to do a little bit better.
It's a real weird deal right now that when something like the tech stocks are crashing, right, you're actually seeing the stocks that have gotten hurt from everybody staying at home accelerating higher, like some of the cruise lines, even the airlines. American's up almost 4%. Delta shares are up 2%. So there's
you
the
get Regions
stocks.
Financial in there. They get small banks in there too. When I was pulling this up, regional banks.
Yeah.
Okay. Because it has acted well before, but I guess it goes from sector to sector. So that's a good explanation. I appreciate that, guys.
Awesome, man.
Cooking, brother.
All right, take care.
Have a great
You
one,
too.
man. Have a safe one.
Bye now.
Yeah, so, Tom, we got a big sacrilege out here today.
What's going on? Just in the time we got that phone call, the S&P just fell 30 points, man.
Yeah. Oh, this. I mean, when you're up these kinds of monies, bottom line is that when this thing comes, it can get very quick because, just imagine if you were lucky enough to have some of those high flyers. I mean, that you're on thin ice, but every day you're still making more money on thin ice until you don't.
The only way I'm holding those shares at these levels is if I'm holding them for another year, 2 years, 3 years, right? If you're thinking of selling in the next 3 months, 6 months, why would you not be pairing some of those gains today, man? Even right now. So,
right. No doubt. Because we're still high. Yeah.
Yes,
Stay right there.
exactly.
Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 250. Get the Nasdaq up off 354. S&Ps are off 58. And folks, as you come over to our website at TFNN, you're going to see right on the front page under featured content Rocket Equities and Options by Tommy O'Brien. Tell them about this newsletter, Tom. You're on quite a streak, man.
I appreciate it, man. So we had a nice trade in there in CrowdStrike last night. Sent out a video for subscribers this morning.
That
just
video was freaking awesome, man. Seriously.
Thanks, man.
Yeah.
Thanks, man. Yeah, and, part of options can get pretty sophisticated, man, and so it's never a good idea, folks, to put your money at risk if you have no idea what the heck is going on, right? So part of it is kind of explaining the methodology, explaining the risk reward, explaining the biases that you might have when you enter a trade. Some of the trades, last night we had a 2-leg trade, right? We've made some 4-leg trades, and just kind of breaking it down so you can really understand it. Because seriously, no matter what newsletter you're paying for, if you don't understand what you're doing, don't put your money at risk, folks. It's that simple,
Right.
So we talked about the trades. We have option trades in there. We have some long-term equity trades, which are handling pretty well, some of those even today. And we got a short-term equity trade. So we have long-term portfolio talking about, and this is just kind of how I apply my own methodology, right? I have a portion of my portfolio for long-term investments. All right, I have a portion of my, which everybody should have, especially if you're in any age group, okay?
Yes.
I have a portion of my portfolio where I'm looking at maybe some short-term equity trades, and then I'm doing option trading as well, which is short-term for sure. So I have all of those sections in there. I get a newsletter every Monday kind of talking about the week ahead, what's on the radar, what we saw last week, updating the positions. And then throughout the week, I got updates out there that are when warranted, when we have trades, whether they're equity trades. We had a short-term equity trade on Monday. We had an option trade yesterday. We get some earnings after the bell today. We'll see how those play out. And we're doing every type of strategy out there. It's depending on where your bias is.
Yeah.
Listen, and they're going to change. Sometimes the type of volatility that's priced into these equities, no matter what you're looking for, and you made a good example. I mean, like CrowdStrike last night, huge move was priced into this equity, talking about maybe a $24 to $25 move.
Right.
I mean, if you
After
bought
it had already gone up $30, right?
Exactly, and then down $30 yesterday too. But if you bought just simply a 145 put yesterday, coming into the end of the day, it was about $14 or $15 you were going to pay. Yeah. Well, guess what? You could have been right. You bought an at-the-money put, you paid $14, and you barely broke even because the stock
you were right, but you didn't make any money. Yeah,
right.
Exactly.
Right, exactly.
Because
and that's
you didn't understand the implied volatility.
That's what I was just going to say. That's what Kevin talks about. Implied volatility is everything, man. What are you paying for the ability to have that right to buy or sell an equity? And so we didn't do that trade because even though we had a negative market bias, it's too much money, man. So we formulated a trade that allowed us to have a negative bias while actually absorbing premium on the upside of the trade. Worked out well. So, yeah, check it out.
And it's very easy to get, folks. So you're over our website at TFNN. You see it under featured content. You get it for a month for $97, 6 months for $4.99, which is a savings of $133 or 22%. A year for $785, which is a savings of $379 or 32%. Now, they all come with a 30-day money-back guarantee, folks. So you get everything to win, zero to lose. You like it, you keep it. You don't like it, you get your money back. So check it out right on the front page of TFNN, and you will enjoy it, no doubt.
I appreciate it, man. One of the things
that value is huge.
It's just the moves in CrowdStrike yesterday, man.
Seriously.
I mean, I sent out the update at about 3:15. And this stock, I said, oh, man, what's going on? It dropped $10 in practically 20 minutes. And then by the time the earnings came out, it was back up there. And then, even today, you just went, talk about defined risk. You just went from 126 up to 138.
Yeah.
And we're back to 128, man. It's just some of these stocks, to trade them without defined risk, I don't know how you do it. You better have some Alka-Seltzer and some seriously, man.
Listen, look at Zoom. I mean,
exactly.
Zoom, folks, okay, is back into the gap. So Zoom 48 hours ago is $478. You're $392, and guess what? It's going to fill this gap. The gap is like $325. People are going to be in shock,
They should be in shock, man, because the stock went up 40% on their earnings, and we just gave back 20% of it in a heartbeat.
Right.
It's like,
and, same with Tesla. The bottom line, let's go inside the NDX right now and see the big dogs, what's moving. Oh, and this is another one. This is going to be after the close today. DocuSign.
There you go.
The DocuSign right now, folks, is down 12.5%, $33 at $233. So look at this. This went up with Zoom.
Yep.
Oh, my God. This is like sick. This is only 24 hours. 24 hours ago, it was $290.
Yeah. Whoever had the courage to go short, because how do you? It's the same thing as catching a falling knife, man. Trying to short a stock that's just going straight up like a rocket ship. Many times you might be wrong. But I talked about it in one of my early newsletters saying, listen, you just went from 220 to 290.
Right.
You went up $70 on nothing but Zoom earnings. That's 1999 stuff, man. You know, when you talk about it, okay? Even if they crushed it out of the park, you already went up 35%. So like you're saying, the market's still, well, let's see what the move they're looking at right now is. $31.43 right now. That stock is looking, so it's about, 14% something. Well, it was still pricing that in. So you're telling me it's going to go from 220 to 290. Then they're going to come out with their earnings, and it's going to go from 290 up to 330 or something. That's where some of these times, no matter how well they're doing, some of it's already priced in, man. Now, guess what? I don't know what's going to happen now because we just gave back it all. We're back to pre-Zoom earnings almost on DocuSign. Obviously, a company, I said it even in my show this morning, I think nobody should ever have to sign a piece of paper in person ever again, man.
Right.
You know, and whether it's pandemic or not, just the ease of doing business, right? You know, the expedient way that you can get things done. They're perfectly positioned. There's no reason why somebody needs to sign something in person ever again. So yeah, they're perfectly positioned. They're going to do well, but they've also done very well already leading up to these numbers.
Exactly.
Yeah.
Now, one of the shockers out here today, not shocker because it's up dramatically too, is you get NVIDIA. You know. Yeah. You know, so NVIDIA, you know, has been on a tear. You know, rightfully so. That being said, you know, you're down $35. And when you get these peaks, folks, and you know, you drop off this peak, you know, we'll see whether you follow through. But it's definitely a heads up. I mean, because what is going to be intriguing here, if you were listening to Larry's show yesterday, man. So in both days, folks, Larry does something with this AI line that he's dealing with. Meaning, yes. And the bottom line, yesterday, the number was at 11:30 a.m. that if the market didn't turn at that, if it did turn at that point, that's what he was expecting. Okay. The bottom line, Tom, this is so sick. Yesterday it was exactly, well, it was 11:40 was the last. Well, that was a higher low too. Okay. So at 11:30, man, it took off topside, man. So pretty cool. Today, it's crazy. So today at 11:30, folks, you want to know where it goes because the bottom line is that, you know, like Larry was saying, if you are negative, you know, he stretched it to 11:30 to 12 out here today. But the bottom line is that, you know, if we are negative then, and, you know, it's going to be a big heads up, you know, and it just has to do with price movements more than anything. But I suspect what we're going to see is that it doesn't take much when you get the acceleration down because we know we're in a computer-driven market. You know, it's not you and I thinking. Once it starts accelerating, they could care less if you're down 100, 200, 300. It's that turn. Once that turn happens, the unloading happens. And just like you said, man, people made so much money in some of these stocks, man. There's got to be some selling at some point. Totally. Money Heaven's going to take it from them. That's right. Yeah, Tommy and I come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now is down 242. You get the Nasdaq off 377. S&Ps are off 60. And Tom, we always talk about the aspect of how quick the NDX. It always blows my mind how quick the NDX can actually go down. Sure. And this is it, folks. Okay, it goes up and up and up until it goes down. And it's just hard to comprehend sometimes. I mean, you get it down 3% in an hour and a half. We'll see where this is going to go, but it absolutely blows my mind how this thing can basically shift. Now,
I totally agree. And the other lining of that is everyone's like, oh my goodness, the Nasdaq 100, it's down 414 points. It's down 3.3%. We're just back to where we were trading at Monday morning, man. The world seemed to be pretty well off on Monday morning.
That's right.
So the point being, it can go a lot lower if this is a real sell-off. You know what I mean?
Exactly. That's for sure. You know what I mean? Because if you're long this, just like you said, well, hey, guess what? Your prices of Monday morning. This might look all red out here, but guess what? It's Monday morning. Big deal. Do you know what I'm saying?
Yeah. I mean, even the S&Ps, we're just 9 points under yesterday's low.
Oh, yeah.
Okay.
And they had run the S&P into the close on Tuesday, too. I mean, that S&P, folks, went up 12 points in like 3 minutes coming into the close on Tuesday. Yesterday, they ran it all day. Bottom line is that, we'll see. What we are getting out here, and this is where it's a heads up, you already have the expansion of volume. We're an hour and 45 minutes into it, and you're going to see, yesterday you made an all-time high, and the SPY with 69 million. Well, you're already at 21 million. So they're unloading. And if we go to the Qs, you're going to see the same type of setup inside the Qs also. The Qs, we've already done 21 million, and you hit an all-time high with 50 million. So, they're unloaded, and it's like a little steamship, basically. The lower you go, the faster that you can actually go, because of the fact that, people say, okay, should I? And then all of a sudden, bang, you know what I mean? Yep. You really get an acceleration.
Hey, I was just going to jump around. You talked about NVIDIA.
Yes.
So Broadcom has been quite a rocket ship as well. They're down 4.5% today, and I bring them up because they have earnings after the bell tonight as well as DocuSign. And they're pricing in right now about a $19 move. Not quite the volatility of some of these work-from-home stocks. And it makes sense, man. Even when I was making that CrowdStrike trade yesterday, you're kind of going, who the heck knows what's going to happen, man? This is a very interesting time. I even put in the letter with the trade. Right. I said, but, folks, we live in interesting times, and you never know what's going to happen. They could defy the odds, and we could lose 100% of it. Any time that you're trading, options around earnings, Zoom should have shown you. You know, it's like there are a bunch of people that probably said there's no way Zoom can go up 40% overnight. Maybe I'll try and capitalize on some of the volatility. Well, guess what? It went up like 42% by the next day. But so Broadcom's got about a $19 move priced into it, but it's down $16 already today with their numbers after the bell.
Right, and they're looking for $5.8 billion, which is not a lot compared to where they've been at. I mean, 5.5 last year, $5.22. So this is not that's not astronomical, acceleration and growth.
No, but and yet, really, I was just going to. So we were at about $320 pre-COVID. We're at $350 now. Not outlandish, right? You know what I mean? The chip sector doing really well. Of course, everyone needs computers. They need cloud. They need everything. But nothing stupid in terms of, and I say stupid as in just extravagant, because you look at DocuSign, man. Well, pre-COVID, we were at, call it $90. And we were right now trading at $220. Forget about the move we just had up to $290 because it just erased it all. But you're still more than double what you were trading at before COVID. And even their last earnings, they were sitting at around 145, so you just went up, what was that, more than 50% from their last earnings? And their last earnings weren't gangbusters, man. Look at where it is on the chart. It's not like it charged higher on the earnings. Yeah, you charged higher from there on out, but not a huge day when they came out with them.
No, there's no doubt. There's no doubt. Let's get over and take a look at this dollar. So this is really intriguing, folks, okay, because this dollar, okay, it's not necessarily shown strength, but, it definitely, the first time we rejected lower price was on the 18th of August. It had broken down, and bang, the next day it goes right back, right? This time, you had 3 days down, had a big day on Monday, Tuesday. You follow through yesterday, and guess what? If this can't even get to the swing point from last week, which is a mind blower, man. Yeah. So it's like, this dollar, man, 88 is game here. And it's just so intriguing to me that it's so weak that it can't even get a small bounce. And when you can't take a small swing point, folks, that is weak in itself, it's like, hey, guess what, man? It's going lower, man. So, and we'll see if that correlation, because what has happened here, of course, is that if you put the dollar up with the market, the bottom line is that what you have here is that dollar's been going down, the market's been going exponential. You know what I'm saying?
Sure.
So the real kicker there is that, okay, is that correlation in place, meaning that if you got, you basically got a bounce, would it pull back? Well, we can see it's just the opposite, right? Well, it's not the opposite, but you know what I'm saying? That we have some major selling right now. And what you have here, folks, is this. Major selling on a Thursday coming into a long weekend is problematic. It's problematic for people that are long. Let's put it that way. You know
I agree.
What I mean?
So what's crazy is it's talking about the election's November 3rd. Today's September 3rd. It's exactly 61 days.
I know.
We have until the election. You got about 22 trading days a month. Okay, so that means we got about 44 trading days until Election Day. We know that this is going to be one of the biggest elections with mail-in ballots ever.
Yeah.
The way that works is the ballots normally have to be received by the day of the election, but they take longer to count. So when does the volatility? The S&Ps are now down 74 points. The NASDAQ 100 is down 500 points. And there is going to be, we talked about Kevin, right, in terms of the volatility getting priced in leading up to the election, right? The October VIX volatility, all of that stuff. Because you're going to have my expectation is we're not going to know who won the election on the evening of the election night. You're going to have Trump claiming he won it no matter what. You're going to have him saying that if he doesn't win it, that the election's been stolen from him. So you're literally going to have a president standing up there saying that he doesn't trust the vote. The market's going to play into that, folks. This is not politics, okay? That is coming down the line. It's coming down the line 44 trading days from right now, and the market is going to flip out when you have a current president up there questioning the validity of the election. And there's no so much uncertainty. And as everybody, the market hates uncertainty. And
listen, when I was working out with Nico this morning, I'm just, as you're working out, I'm thinking through like the next couple of months, and I'll stay long gold, but I'm not going to be long or short, I don't think, the market until this thing comes in.
And again, everything's going to be
right before it. You know what I mean?
Right.
It's like,
everything's going to be fine. A Biden presidency, a Trump presidency would be fine for the market, but it's not going to like when the democracy's at stake, man, the night of the election. So
yeah. Dow right now down 325, NASDAQ off 432, S&P's off 70. Tommy and I come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks and commodities, along with specific recommendations including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 302, Nasdaq's up 408, S&P's are off 64. And Tom, we have a question about the correlation between Harmony Gold trading in the United States and being a South African company. What you want to wrap your head around, folks, is this: is that the way that all these South African companies work is that they're paid in rand dollars, and you can see Harmony has 32,000 employees. And Harmony gets its money in cash U.S. dollars. So the correlation, when you go over to the rand dollar, what you're going to see here, and the way you analyze these is rand dollars per gold. So you can see rand is at 16.72, which is very weak in correlation of the U.S. dollar. And then if I put this up, I'll put the gold contract up for a second, in rand dollars. And when you see in rand dollars, this thing is, you talk about all-time highs. This is like, yeah, watch this. I'll just put it in 30 years. And you're going to see the correlation of how the South Africans, basically, they have millions of ounces of gold, but now the gold is very expensive, but you can see that you're at all-time highs. At 2011, it was 19, well, no, rand dollar was. Hold on, do I get the rand dollar?
You got to change the local CCY, the currency.
Thank you, yeah, rand, ZAR, there we go. Okay, so...
It's taking its time. It's taking its time.
It is taking its time.
It's got a lot of calculations to make over 1990 to 2020. Maybe it's going to tell us by the end of the...
Oh, my God, look at this. Okay, so there you go. In 2011, the highs were 20,236, and right now, rand dollars, you're at 36,000. Yeah. How's that, right?
Pretty cool.
Pretty amazing. Folks, don't forget about Rocket Options and Equities. You can check it out right now. Just go to TFNN, go to the featured content. 30 days, absolutely free. Think of Swim coming up next. I'm man Basil Chapman, Steve Rhodes, Dave White. Thanks, pal.
Thanks, man.
Go get him, folks. Ride him, cowboy.